Look, if we start with just the property market history, the easiest way to start with that is just go through the historical prices of the market. Now, look, if we look at historically the prices of the market itself, we can see just here kind of what's happened. This is kind of since, 1881, sorry. So you can see there kind of since, I'd say, the 50s, there's been quite consistent growth, especially since the 70s as well. You can see there pretty much, there's reasons why, the market has performed that way, and reasons why, should I say, there's been quite ridiculous performance, which I'll go into in the next parts of this episode in terms of this. But you can see there really, it was literally like 50 grand in like the 50s, and now this was 2021 and it was 747,500. To give you an idea, in 2025, that number's in the mid 900s now. So depending on where you look, it's somewhere between generally 930 to about 970 grand. So it's grown quite significantly in recent years as well on this. So that's kind of where we are in terms of history of the market. Now, look, the reason a lot of this has actually happened is there's been quite a bit going on in the time frame. So look, for those that don't know this, there's a few key things that have happened. So you can see they had the investment land boom in the late 1890s. So that's the only time the market has actually truly crashed. You had the post-World War I inflation spike. Then you had the two depressions also in that period. Then we actually had price controls pre-World War II. And the minute that got removed, we had that massive boom. You had the wars, the recessions as well leading up, and the mining boom sort of in some of those periods as well. So that's kind of also what's happened in those periods. And you can see there, you had credit booms, mining booms, and more credit booms, GFC, COVID-19 there, all basically happen, or quite a few things happening in there. Another fly's bloody here near me. It's fucking annoying me. Anyway, what's kind of going on as well here is what you need to understand. There's kind of a couple of things that happened. So basically, Australia had the dollar moved off the gold standard, actually, believe it or not, before that removal of price controls. But that was so the price controls probably affected the market most. But then, which was the major thing that kind of happened, was the actual United States took the dollar off the gold standard there in the early 70s. So that basically created an, should I say, untangible regulated dollar. So it's basically just become completely fiat, not based on anything real. So that's the reason you can see mining, finance, and credit continuing to boom the economies. It's because of dollar printing. That's predominantly the reason of what's going on. So that's a big overview of kind of what's happened. So the market really, it hasn't been the same since kind of the early 70s. It's completely changed since then. So that's a bit of the history of it. And I mean, just to go into recent years, kind of what's going on, you can kind of see everything that we've had here just here. So you can see it's consistently grown. And look, this is largely controlled, don't get me wrong, by should I say the Melbourne and Sydney market. If you add Brisbane too, very heavily by all of them. You can see all these little events, but a few key ones. Capital gains tax is one of them that changed. I mean, the other ones, another key one, I guess, as well, was the GFC period. That's another key thing. I guess the APRA rules of your 2017-18 that came in as well were pretty important too. And then also you had also all those APRA rules down the bottom there, which with the serviceability buffers, the macroprudential moving of things, and also the sliding down of interest rates as well, which is what I'm about to get into. But you can see there how much it's just grown. And this is just an aggregated of capital cities and aggregated of regionals. But I mean, if you were to look at really the key ones I buy, which we'll get into this episode later, I mean, really you'll see what I'm talking about. Like these numbers are small compared to the best capitals. But anyway, another key thing we just need to get into is the historical rates of interest and inflation. So this is your variable home loan rates, basically your average ones here, and basically your, should I say, your CPI, which is your inflation rate there. So your cash rate, not cash rate, but it's your home loan rates are in the dark blue there, or it's probably more royal blue, and then your actual CPI is in the sort of orangey red color there. So you can see there really, like, we are at quite low interest rates over the long term. What I will say though is with asset prices and with the ridiculous amount of money in the system they don't really have a choice other than to keep interest rates low. Like they could increase them, I'd say, to like maybe somewhere between 5 and 7% as a cash rate. I'd say that would be something that would be realistic and may happen at some point if things really needed to happen that way. But it'd be a pretty extreme circumstance, should I say. But I mean, for anyone who really thinks they're going to go back up to 18%, that you're just living in la la land. It's never going to happen. There's too much of a vested interest in it. If I would to predict where I think the highest it will go from here would be, I mean, I'd be surprised if it went anything, above that kind of probably 5.5%, 6% mark. I know I said it could go to 7%, but it'd be very rare. As a cash rate, I'd be very surprised if it went anywhere above that, because the whole system would basically implode. That may happen at some point, but for the near future, I can't see it happening. And when I say near future, it's probably the next 5 to 10 years or so. I can't see it happening. But that's a bit of the history of basically our interest rates. Definitely, for what everyone needs to know is, since the dollar's been taken off the gold standard, and especially since the 90s, when we really pumped the economy full of money, it's quite unlikely that those things are going to happen, because it would create almost like a war and panic on the streets everywhere. So that's just what we need to know about where interest rates are, and that's a history really of interest rates. I brought this back to literally 1960 because I think it's important for people to know kind of how it worked before the dollar was taken off the gold standard. So that's kind of where we're at in terms of interest rates and the history, should I say, of all of these markets. So very important in that.